everyone, I'm Jackie. We are enjoying life's journey while on the path to financial freedom. Welcome to the channel. Welcome to our yearly budget plan for 2020. I really encourage you guys, if you don't do a yearly budget, to give it a shot this year. The reason this is good is because you might have things that change in your life and you want to project them out the best that you can, whether you're getting raises, maybe you're changing jobs, maybe you have kids going in and out of daycare. All kinds of things can change from year to year. So I encourage you to have a couple years kind of planned out, and then every year, a couple months before the year starts, go ahead and plan out the next year the best that you can. We know this is just estimating the best that we can, but when you have a plan and you see it all in front of you, it is really life-changing. So we use a zero-based budget, and we also use a percent-based budget. So if you're interested in seeing how we plan out the entire year and see what our 2020 is going to look like, then join me. Let's go on the Excel sheet. All right, you guys, so this is my yearly budget template. I will have this should be for sale on my Etsy shop. If it's not there, it's coming very soon. So if you're interested in having one of these, then you can pick it up over there. So basically we have the year, it's 2020, and then I have every single month. The month that has a star, for us, these are months where my husband has 5 paychecks instead of 4 paychecks. He gets paid every single Friday, so these are months that have 5 Fridays, so we can kind of see, we can plan that ahead. Now, depending on how you want to do it, some people try to act like that other paycheck doesn't exist, and they put it all into savings or all towards debt or whatever it is. That is a great option. We do a percent-based budget, so we like to incorporate it into the entire budget. Also, we have things like groceries and gas that if it's a 5-week month for us, because we go Friday to Friday, then we need to increase those in our budgets to account for another week worth of gas, another week worth of groceries, things like that. So sometimes that may not work for us, but if that's how you want to do it, then that's a great option. So now what I have here is our income before taxes. Yes, we like to calculate everything before taxes, and we include our taxes down in our necessities account. So for 2020, this is just, again, these are estimates, these are projections based on what we can foresee. Currently, my husband makes $19.75 an hour, and he works, his base pay is a 40-hour work week. So you can see here in January, he has 5 checks, so he's expecting to have $3,950. February, we're doing this based off of what happened this last year in 2019. The whole entire company, everyone was given a raise, so he was given a $1 raise. So in February, we've done the budget as if he's had a $1 raise, and same thing with March. April is his yearly review, and last year he had a 75-cent raise for his yearly review, and then he had a 50-cent raise for his apprenticeship program. As they complete a year of the program, they get a raise as well. So in April, I went ahead and marked that he had a 75-cent raise, and then in May, I went ahead and marked the 50-cent raise. So by June, he should be making $22 an hour. So we've projected that out. For his base pay, he's looking to make about $44,600 for the year. This is a pretty decent amount for us. In the past, we've only made maybe $30,000 or $35,000 total for the entire household, including our tax refund. So that's definitely, we're moving up in that category. Now he also has overtime. They're pretty consistent with having 10 hours of overtime every week. This does fluctuate. Sometimes they have no overtime. Sometimes he'll have 20, 25 hours of overtime. It kind of depends. So on average, we just say 10 hours a week. That is time and a half. So if he's making $19.75, that would be time and a half, would be $29.63. If he was making $22, he'd be $33. So again, we calculated the time and a half pay based on the projected months that he will see his raise, and then out for the rest of the month. So he should make around $16,729 for the year worth of overtime. And again, like you can see, I have my yearly budget, but then we projected out for each month. For myself, for self-employment, this is totally just as much projection as I can do. This last year, 2019, I averaged about, if I averaged the whole, what I made for the year, and I averaged it out per month, I paid our personal budget about $630 a month. I am going to lowball it for 2020 just because I am transitioning into my official career now that my daughters are in school. So we'll just have to kind of see how that goes. So I'm just going to say $500 a month for 2020. And if it's more than that, which would be ideal, then great. Cash back for Discover, we're just going to estimate $10 a month, but usually we see about $30 a month, but we're going to lowball that as well. And then for interest from our bank account, we are just doing the current interest that we earned. The last month was about $4.07, so we're just going to project out $4 a month. This obviously is going to go up as we put more into our emergency fund, and it could go down if we have to use money out of the emergency fund. So we're going to just project $4 minimum for now, and again, we can come back to that later. The next one that we're putting on here are bonuses and reimbursement. My husband, they got a yearly bonus. I give our personal budget a quarterly bonus out of my self-employment. And then we are actually going to have to pay for health care through Ricky's work this year. Before, we've had it free through the state because we were a low-income family. We are no longer low income, so now we are going to be paying for our insurance. So this is something we have to make changes for 2020. With that, Ricky and I can each earn $500 from his employer for having good health. So there are a few different blood tests and other tests that we would do and have our doctor write off saying whether we were in the acceptable range or normal range, and we can earn money for that. So that's what I've included in here as part of reimbursement. And then also they will reimburse us up to about $150 a year for things that were used to improve our health. So we're hoping to put that towards our gym membership, our YMCA membership. So in February, we're estimating a $1,000 bonus from Ricky's work. We have March, we have my quarterly bonus from my self-employment. We're going to lowball it at $100. Sometimes it's closer to $150 or $200, but we're going to just say $100. April, we're going to say that Ricky's done his yearly checkup and he's passed his test, so he'll be reimbursed in April. June, we have my quarterly bonus from self-employment. We'll say in August, this is when we'd get reimbursed. I've done we'll say that I go do my yearly checkup and I get reimbursed or I get paid the $500. September's quarterly bonus, and then December will be my quarterly bonus and then the $150 reimbursement from Ricky's work. So these are projected out based on that. Now, B-Day money, my dad has religiously given me $100 for my birthday ever since I moved out of the house. So I put that on July. Should I expect it? No, but it's been there, so we're going to go ahead and plan for it. The idea is to cash flow plan, to plan everything that's coming in so nothing goes unmissed. Tax refund, we're estimating $4,000. This is a total estimate, and this is between federal and state. 2 years ago, we got about $6,500 back. Last year, we got about $4,500 back, so I'm gonna gradually start lowering this number because as Ricky and I make more money, we're not going to be seeing that much of a tax refund. Pretty much what we expect to see from tax refund is, one, how much Ricky's already overpaid. He overpaid about $1,000, so he'll get that back. And then the child tax credit. In the past, we've had the earned income credit. We will no longer qualify for that moving forward. So again, this is just estimating $4,000. It could be less, it could be more. When I do our actual taxes in January and I know the actual amount, then I will make the appropriate changes. And I just have a column down here for savings / rollover. So anytime I have to use money out of savings, I will document it in here so I can see how often are we pulling out of savings or are we rolling over. Say I put money aside in 1 month to cover something for the next month, I can make sure for that. So all in all, for 2020, we're expecting to make about $70,000. This is huge, you guys, because like I said, we used to make like $30,000 a year. So we've come a long way. We're still going a long way. It's super exciting to see. And again, this is before taxes, so we're feeling good about that. Moving down, we have our first percent-based budget, which is paying ourselves first. So Ricky and I had said that we're committed to paying ourselves first, 12% of our income. These are all percents before taxes. 8% is already scheduled. That comes out of my husband's paycheck automatically to go into his 401k. So this is 8% of his income and overtime. And so you can see how it fluctuates each month, again, based on what he's making. And that basically we should be able to invest close to $5,000 by the end of the year. Our goal to reach our financial freedom number, our financial independent number, is to be investing a minimum of $400 a month for this next year, gradually increasing that to $600 a month, and then once the house is paid off, increasing that to like $2,000 a month, right? Like trying to really bump it up. So if you were to average all of this out, that 4,900, we would be basically investing about $408 a month. So we're looking good for our goal there. Everything that's left to make up the 12%, so roughly 4%, goes into the emergency fund. Our goal is to have our emergency fund up to about $12,000. We ended out the year at about $2,500 or so. So if we add another $4,294, that puts us, I mean, we're not quite there yet. We have probably another year saving into that fund. Progress is progress. So you can see again, this fluctuates. These are all based on percents, so that will depend on what our income is, but we have it planned out, estimated for the year. Our next category is giving. So we're doing 4% for giving. We're going to try to do half of it for gifts. This is for birthdays. This is for friends and families, for birthdays, holidays. This is tipping money at restaurants, hairdressers. This is care packages or just giving money to any random person. And then donations. This is to an actual charity in which that amount that you donate can actually be written off in your taxes. So we're going to shoot to just split it half and half. Again, you can see it fluctuates month to month based on our income. That's why we're doing a percent-based budget, because this helps us. And then you can see roughly we should be able to give close to $3,000 by the end of the year. So this will be nice. And then our necessities. This is another one that's kind of fluctuating. We're fluctuating in these percentages based on what bills and things we have coming up. So this, our goal is to have our necessities as low as we can, but for the year 2020, it's looking like we're going to fluctuate between 68 and 76% of our income, again depending on any given month. So we have our taxes here. These are all estimates based on what our percents looked like from 2019. These will most likely change because my husband will make more money. However, he'll be putting more money into 401k, so that will lower his taxable income. So we're going to leave it as is based on the percentages that we've seen for 2019, and we'll adjust this once we get into the year. We have family life insurance, we have long-term disability. Those are going to stay what we have now. You can see here we're going to be adding on our health insurance, so United Healthcare. This is roughly $85 and some change every single week that my husband gets paid. So you can see it fluctuates based on whether it's a 5 paycheck or a 4 paycheck month. So roughly between $400 and $340 a month for our health insurance. This is for our family of 4. And then we have our mortgage. This is our principal, our interest, our private mortgage insurance, our property tax, and our homeowner's insurance. This could fluctuate. Once we end out 2019, we'll see if property tax has gone up, if our insurance has gone up. So that would be the only two things that would factor this increasing. But for now, we'll leave it at what we've been at, and that would stay consistent across the board. Home maintenance, personal care, and household. I made these purple. These are the ones that basically, this column here, any of this amount of money here could be used for any 3 of those. We'll kind of just see how it goes. We've been stockpiling personal care items and household items to cover us for a year's worth of those supplies. So this number here should most likely be for replenishing that year's supply afterwards. So hopefully we'll see how that goes. All right, so groceries, we're going to keep as is for 2019. We seem to be, the amount that we spent on groceries seemed to be working, so we're going to use that same number for 2020. So basically, like I mentioned, if we have 5 Fridays, we basically have 5 weeks we need to purchase groceries for. We're doing about $84 a week. We're a family of 4. That seems to be working. This could change. It could go up. We kind of just have to see how it is. But for now, we're going to project out basically either $420 or $336 for groceries throughout the year. And then coming down to some of basically the household, this is whatever was left. You can see here at the bottom we have zeros. I budgeted out the rest of the bill stuff, and then we put what was left there. Okay, so that's that. Okay, so my husband's cell phone is $35 a month. We're going to leave that as is. We don't plan on making any changes. Our electricity, our solar cancels out our electricity, so we should owe zero every month. So we're going to leave that on there just in case for some reason we go over. We'll know we'll have to cover it. Our solar is $81 a month. We're in a contract with the company for about 20 years, so it'll be $81 a month for 20 years, so that's nice. Water, sewer, trash, we're estimating $55 a month. That's what we've been averaging over the last 6 months, so we're going to project that out for next year. Car payment, we plan on adding, replacing my car, so this is what that will be, $449.73. And then Ricky's truck, $369.83 is what his truck payment is. Gas, this is another one. If it's 5 Fridays, we are doing $300 a month. And if it's 4 Fridays, we're doing $240. We'll have to see. We've been doing more like $250, so this might change. But again, it's good to kind of project out the best that we can. And then our insurance basically covering the car and the truck. And then towards the end of the year, then we will be doing the motorcycle as well. So these numbers change slightly here. Maintenance for the vehicles, we didn't budget anything for that. Basically, maintenance for the house and maintenance for the vehicles. If something comes up, most likely we'll just dip out of the emergency fund and cover it that way. Registration, I put $200. I really don't know what it's going to be like. I need to double check our registrations from last year and see, and then the motorcycle registration of $35. So again, we'll just have to see. This could change. And then my daughters can earn their age every week, so this changes as their birthday comes. So my oldest is 8, and then she will turn 9 in February, and then my youngest is 5, and she will turn 6 in August. Again, depending on if there's 5 weeks or 5 Fridays or 4 Fridays, this fluctuates here for them. But all in all, like I said, our necessities will be anywhere from 68 to 76% of our income. And then down to paying off the mortgage. So we have our other debts in here. Our Discover card, we don't carry a balance on there. We use the Discover card to purchase gas, groceries, anything that we can really, so we can earn cash back, and then we pay that off completely. The truck and the car, we do not plan on doing anything extra to. Our focus is the mortgage. So our goal, in order to reach our payoff on our mortgage within the time frame that we're projecting out, we need to be paying off a minimum of $300 a month during 2020. So if you see, we have some months where we're doing 0%, some are 8%, some, basically for the year though, we're going to pay off another $3,689 worth of the principal of our mortgage. So if you were to divide that up between the year, then we're paying about $307 a month on the extra principal of the mortgage. So that is good. That's in our goal amount. So that looks good there. And then our last category is fun. In the past, we've done 10% to fun. Because our necessities went up, we added on my car. Basically, we lowered our fund to we lowered it from 10% to 8%. Eating out, we were trying to do 10% for our food budget between eating out and groceries. We're not going to do that. We're just going to try to stick to like $40 a week. So again, if it's a 5-week Friday, if it's a 5-week month, then $200 or $160. So that's what we're going to do for eating out. Movies or events, this is for taking our kids out. $50 a month is what we're doing. Date night, we're sticking with $100 a month. Some months we spend a little less, some months we spend a little bit more. We'll just have to see how this fluctuates. The YMCA membership is currently $60. However, I am going to be certified as a Zumba instructor, so I plan on getting hired at my YMCA to teach a couple classes a week, which should lower, I'll get a discount on the family YMCA membership, and then obviously I'll get paid to teach, so this will be good. So mostly the YMCA will be for, Ricky to use the gym if he wants to, for us to be able to take advantage of the daycare if I bring the girls with me, and for the date night that they offer parents' night out. Netflix is $9.83. This is what it currently is. So sometimes this goes up on a yearly basis slightly, so we'll kind of see if this fluctuates. And then whatever is left is going into the vacation. We have a cruise in December of 2020. So you can see a good chunk of the tax refund is going into the vacation, and then this fluctuates just based on whatever is left from the 8% from what our fixed amounts are. So this should be plenty for that. That's what the year is looking like. So like I said, it's a zero because we've told every dollar where to go. We are focusing on some of our percents here. So we have our goal of paying at least $300 a month towards the mortgage, $400 a month into our investing, so that, we're looking good with those goals. Love to hear from you guys. Have you planned out your year yet? What is it looking like? Leave me a comment. As always, thanks for watching, and I'll see you soon. Bye.